Okay, so welcome to another webinar. It's awesome to see some regulars here. On behalf of me and the FP Markets team, thank you for taking the time out of your busy schedules to attend the presentation. I'm sure, well, I hope you will not leave empty-handed. For newer faces here, so you all know who's behind the mic. My name's Aaron Hill and I'm one of the market analysts here at FP Markets. Now, this is a presentation on the wonderful world of Fibonacci. I see a lot of confusion among newer traders regarding the correct application of Fib levels. So hopefully today I can help clear some of this confusion. As usual, any technical issues during the presentation, please let me know and the support team will try and get things sorted. Guys, can I just check my my sound, the screen, the welcome slide is visible and you're hearing me loud and clear? Just type Y or N in the chat box. That would be fantastic. Oh, good. Thanks, guys. Excellent. As for a recording of the webinar, this will be available through the FP Markets website and on FPM's YouTube channel. Support also sends out an email following the conclusion of this presentation. Okay, before we dive in, let's just quickly run through the disclaimer on screen and then we can touch on the agenda for the webinar so we all know what to expect. The disclaimer informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. FP Markets do not take into account your personal investment objectives, financial situation, or particular needs. This is ultimately there to say what we talk about in this webinar should not be considered as investment advice, and you should always, as I say in most of my webinars, you should always do your own due diligence with everything in trading. In terms of topics, we'll look at an introduction. We'll first kick things off with an introduction to Fibonacci. There's a truckload of information about this available on the net, so I won't dive too much into this. What most of us are here for anyway is the application of Fibonacci to charts. So that's the main focus. Following a brief introduction, I will then look at retracements, extensions, projections, and expansions. By the end of this session, you will know how to apply these correctly to the charts. We'll then round things off with a Q&A session. As I point out in most of my webinars, if I'm unable to answer all of the questions or you're unclear on anything today, please go ahead and email me and the research team at FP Markets. Oh, sorry, excuse me, market analyst at fpmarkets.com. That should be up in the chat box. Yes. And look, the research team will get back to you as soon as possible. Also, if you have a topic you wish us to cover in future presentations, send across your ideas and we'll look at creating something for you. Let me just check that. Let me just put the email in the chat box there, guys. Just bear with me a second. There we go. Okay, just to be clear, this presentation assumes you have some understanding of chart structure and basic knowledge of technical analysis. If not, feel free to watch previous webinars where me and the team go through this. Before looking at Fibonacci trading applications, I feel it's important to understand how the Fibonacci values are derived. I won't go into who invented this, the Fibonacci structure, as this can be found through a simple Google search. What I do think is beneficial to understand, however, is how the Fibonacci values are constructed. The Fibonacci sequence, as you can see on the screen, it represents a simple string of numbers which that boast unique mathematical properties whereby ratios are formed. Now, these ratios are found in things like nature, biology, and luckily for us, they can be applied to the financial markets. Why do they work in the markets is often a question I get asked, and I always answer it the same. I believe that Fibonacci levels work due to what's known as the cascade effect, which arises because of the huge number of traders artificially creating support and resistance at these levels. Now, the Fibonacci sequence is an arrangement, or as I've said, is an arrangement of numbers, which where after 0 and 1, every number is the sum of the two previous numbers. While at first glance this may appear difficult, it is relatively straightforward. So look, 1 plus 1 equals 2, 2 plus 3, 5, 5 plus 8, 13. Look, 89 plus 144 equals 233. This essentially continues to infinity. Now, in my humble opinion, a trader should understand this structure if you are serious about trading with Fibonacci levels. And this is where we can extend this understanding to the interesting relationships that materialize between these numbers that form the basis of Fibonacci trading. So kicking off the calculation with key Fibonacci retracement levels by as I'm sure you can read here, by dividing a number in the Fibonacci sequence by the next highest number, it will equate to approximately 0.618. So look, if we divide 5 by 8, we get 0.625. Divide 55 by 89, we get 0.617, and look, 377 by 610 will actually give us 0.618. I think you get the idea, and can see that the larger the value in the sequence, the closer the value is to 0.618. And as most Fib traders, or any Fib traders present will know, the 61.8% forms the basis for the 61.8% Fibonacci retracement level. Now, what about the 0.382 value? This is the 38.2% Fibonacci retracement. How is this formed? Well, we simply divide a number within the sequence by the next two higher numbers to provide an approximate value of, as I said, 0.382. So if 34 is divided by 89, this gives us 0.382, and 233 divided by 610, it gives us 0.3819. Again, guys, this is really basic maths. And should not really, we don't really need to spend too much time on this kind of these concepts. But I will just cover really quickly. To get the 23.6% value, we simply divide the number in the sequence by three higher values, so 21 and 89, for example. For the 78.6% ratio, this is the square root of 61.8%, and for the 88.6% Fibonacci ratio, these two ratios here are considered very deep Fibonacci retracement ratios. And look, the 88.6% ratio is the square root of 78.6%. Also, I think it's important to note, to point out that while not officially a Fibonacci ratio, the 50% level is also commonly used as a retracement ratio. Another point of note, of course, is 1.618 is known as the golden ratio, or golden mean, or phi. The inverse of this is 0.618, and both numbers are found throughout nature and biology. Therefore, they are deemed important levels by traders. As for Fibonacci projections. If you divide a number by the previous number in the Fib sequence, it will give you approximately 1.618. Now, the 1.618%, as I've already said, is a critical level in the Fibonacci world, especially in Fibonacci projections. So look, by dividing 89 by 55, you will get 1.618, and by dividing 8 by 5, you will get 1.615, and so on. So another popular Fibonacci extension, Fibonacci projection, excuse me, is the 1.272% value, and this is simply the square root of 1.618. Now, again, guys, apologies if this has confused any newer traders here. Please feel free to watch the recording a couple of times, as it's always good to know how how these ratios are derived. For those newer traders here, I'll just quickly run over what a trend is, so we're all on the same page, and then I will dive into the Fibonacci retracements. Now, a trend is what many traders and investors pursue to make profits in the markets. I'm sure most of us have heard of the old adage, "The trend is your friend," and it really is true if you manage to time the trend correctly and have the patience and risk management to ride out the pullbacks and retracements. So an uptrend is simply, or an up movement or bullish movement, or whatever you want to call it, as you can see on the slide, consists of higher lows and higher highs. These are consecutive higher highs and consecutive higher lows. And this simply shows that buyers are in the driving seat. I won't spend too much time on this because it's pretty self-explanatory, but for a downtrend, this consists of lower highs and lower lows, and shows that sellers have taken the wheel. I hope you get the gist of what I'm trying to demonstrate here, which is essentially to look for clear trends and clear swings within the trend, and this especially if you're a newer trader. Now, the next slide is my attempt to demonstrate or show how the Fibonacci application, how to show the correct Fibonacci application and their associated labels. Do bear in mind that these are, as you can see, drawn examples and are focused on an uptrending environment. But please don't be too concerned regarding this, as we'll also look at downtrends as we progress. Now, the Fibonacci retracement levels are essentially horizontal lines that indicate where support and resistance resistances are likely to occur within either an uptrend or downtrend. But please don't be too. But they only require 2 points, as you can see on the slide, A and B, swing highs and lows. So to apply a fib retracement in an uptrend, you would require a higher low at this point here, and quite simply a higher high at point B. And for a downtrend, a lower low and a lower high. If you remember on the previous slide, to apply a Fibonacci retracement in an uptrend, we simply start from this point here, the high low, draw the tool from the higher low to the higher high, and this will extend your Fibonacci ratios within this swing here. The same for the downtrend. Simply find the lower high, start at this point. This will be point A, and this will be point B, your lower low. So once you extend the Fibonacci retracement tool to this point here, your Fibonacci retracement levels will spring out at this point here, within this swing here. Okay. Are there any questions on, guys, if there are any questions regarding this, do fire away and I'll answer these as we go. Look, a Fibonacci extension is very, very often confused. by many traders I've seen. Look, a Fibonacci extension is simply an extension of the Fibonacci retracement application. So like the Fib retracement, to apply the Fib extension tool, 2 points of contact on the chart are required. So to be clear, the Fib extension tool comes into play when price exceeds 100% of the retracement between points A and B. So initially we set our Fibonacci retracement tool from point A to B, and the Fib retracements, so we have the 38.2%, 61.8%, and this goes all the way down to 100% at point A. Now, the Fibonacci extension tool can be applied once we've breached the 100% of that retracement. That's simply all it is. You will find the extension tool very, very handy when looking at combinations such as the 3-drive formation, which requires a 1.272% Fib extension, and what's known as the AB equals CD structure, which is a simple harmonic pattern. Okay, on to Fibonacci expansions. These are used when you want to anticipate future moves without a retracement present. So ignore this retracement here. Ignore this retracement. So what I'm trying to say is, so if price surged from A to B, and you wanted to locate possible resistance or Fibonacci ratios ahead above price without the swing, you would simply draw the Fibonacci expansion from point A to B and then back to point A again. Yes, as I said, this is a very good tool to locate possible resistance, possible levels of resistance in an uptrend without the retracement in between. Now, for the Fibonacci projection, this is used in a number of technical concepts. The Fibonacci projection is, and quite simply, to apply this, we require 3 points of contact. This is, as you can see, A, B, and C. As per the diagram, point A is a higher low, point B would be a higher high, and point C would be an additional higher low. Now, once you have these three points in play, you can extend your Fibonacci projection tool from point A to B and then point C. Then you will get your projection levels above point B. Now, I personally use this a lot in my analysis to determine AB equals CD patterns. So you can simply use the 100% projection, which I will be showing on the charts very, very soon. Okay, that's a basic demonstration of the Fibonacci structure with their labels. Are there any questions regarding this before we move on to the charts? No. Okay, we're all silent. I assume that's all understood. Excellent. Okay. So to go. So at this point, I think with everyone understanding that previous slide, I think it would be a good idea to switch to the charts and go over. Oh, okay. We have a question. Which one do you tend to use the most? So for me, whoops, sorry guys. So for me, I use the three I use the most, to be honest, are the Fibonacci retracement, extension, and projection. As I said, the projection is mainly used to determine the AB equals CD formations, and the Fibonacci extension is used in the 3-drive formations. But I also use the Fibonacci extension along with Fibonacci projection because, which I'll show you on the charts in a moment, that links up with the AB equals CD formations. And with all of these Fibonacci structures, you can form what's known as Fibonacci clusters. Now, these are incredibly important to understand, and hopefully by the end of this session, you will go away with an understanding of what this is. So a Fibonacci cluster is simply a level on the price chart in which Fibonacci ratios converge. So you have a tight area of Fibonacci confluence, and this can provide you with incredibly high probability support or resistance, depending on your direction. So yeah, I do use all of them, but I tend to focus more on the retracements, extensions, and projection. And we have another question: in what time frame? For anyone that follows my daily market analysis will know I focus on a multi-time frame approach, so which means I focus on the the weekly, daily, H4 and H1 time frames. So yeah, I don't really have a set time frame. Obviously, the higher time frames tend to offer the more steady areas of interest, but I do also focus my interest on the lower time frames, meaning the H4 and H1. How reliable is the Fibonacci projection? It's incredibly reliable. It depends on, again though, it depends on in what context you've got the Fibonacci projection on the chart. So if it's converging with other Fibonacci ratios, it can be very high probability. You also have to take trend into consideration as well. If you're taking a level counter trend, this can prove troublesome at times. But yeah, hopefully once we move over to the charts, you'll have more of a deeper understanding. Okay. Let me just spin things over to the charts. Just bear with me. Okay. Guys, just if you could do me a favor and just type Y or N in the chat box, just to let me know you can let me know if you can see the chart clearly, and then we'll get going. Okay, brilliant. Thanks, guys. So we have one more comment here. Can you look at the US spot oil chart, please, with Fibos? Yeah, I was meaning to say that, guys. If you have any charts you would like me to go over, please do let me know. If there's time at the end, we'll look at a couple of new charts. So as you can see, this is the Aussie dollar H4 time frame, and I've applied a handful of Fibonacci ratios. Now I'm going to begin with. So if you remember, it's important to understand what trend we're in. So here you can see we're clearly facing lower. Sentiment is clearly to the downside. We are forming lower lows, lower highs, lower lows, lower highs, etc. So within this area, we can apply Fibonacci potential Fibonacci supports where the trend will potentially bounce from, not necessarily reverse, but just form a pullback, and areas of potential resistance. I know this looks like a bit of a mess, guys, but it should make sense as we go forward. Now, if I zoom in just a touch, I'm going to be looking at this downtrend here, and I'm focusing on this area here and this area here. Now, as I said, we are in a downtrend, and within this downtrend, as I said, support can develop and can help predict potential take profit targets, as well as possible support to fade the current sentiment. So here you can see we have a number of support found through the Fib projection and BC extension, along with levels to the left. Now, let me just try and go over these. So look, as you can see from the points here, 1, 2, 3, this is the 1.6. Guys, if you have these charts on your platforms, please do get them up as I'm talking. It will make it a lot easier, and try and draw them so you can get a better feel for what I'm actually showing here. Let me just remove my, no, let's leave that on actually. So look, we got 1.618%. So remember, 3 points on the chart. This is a Fibonacci projection. So we've taken point A, this is a lower high, lower low, lower high. Now this is enough to form a Fibonacci projection, and as you can see, this come out at 73.19 on the Aussie dollar. Is this enough? Is this enough to potentially help determine support? It's not enough for me, but some traders will say it's enough. But for me, I require a lot more Fibonacci, a lot more Fibonacci activity within this area to gain confidence. So as you can see, if I just zoom in a touch more, we also have a 100% Fibonacci projection. Now, as you can see from the 3 points, I drew this from this point here. Whoops. This point, this lower high here, down to this lower low there, up to this lower high here. And that's extended the 100% Fibonacci projection. Now, if you remember in a few slides back, I said the 100% Fibonacci projection represents an AB equals CD formation. It's a simple harmonic structure. And so at this point, we have the 1.618% Fib projection, the 100% Fib projection, alongside what's known as, let me just get that on the chart, I believe it's a 200%, if my eyes are not failing me, a 200% Fibonacci extension. Now, this may confuse a few people, but for anyone that's read Scott Carney's work on AB equals CD ratios, you will note that he speaks about AB equals CD reciprocal ratios. Now, all this simply means is that the C point retracement in the AB equals CD formation forms a relationship with the BC projection. So with this, knowing we have I believe it's a retracement. So let me just, without confusing you guys, we have the 100% Fibonacci projection drawn from these levels here, right? From this lower high, lower low, lower high. Now, with this, we need to understand that we have a Fibonacci. Let me just draw this up for you guys so you can see it. I think it was a 50%. 50%, yes. So it was a 50% ratio, which, according to Scott Carney's work, means that we require a 200% Fibonacci extension from. Look, if I just get the 100% up again. So this is point A, point B, point C, and then down here is point D. So the BC Fibonacci extension should provide us with a 200% Fibonacci extension. Now, do bear in mind, Scott Carney actually calls the BC Fib extension a projection. He's the only author I know that does this. Other authors stick to the commonly accepted terminology. So as you can see, we have a 200% Fibonacci extension, a 1.618 Fibonacci projection, alongside a 100% Fib projection as well. Now, knowing this, we can also spin back to the more longer term stuff on the chart, and you'll find that if you took the extreme high here down to the low here and to the high here, you will also get a 1.272% Fib projection at 72,890. And as you can see, this comes in, and I believe if I just extend these to the right, you'll see that price actually bounced nearly to the pip off of this level. But you can see how this converges closely with these areas here. Now, just to be clear, I do look for Fibonacci clusters to be very, very tight. This wouldn't be that tight, but given it's such a long-term level, it certainly needs to be taken into consideration. In addition to this, we also have a deep 88.6% Fibonacci retracement value. If I extend that to the right as well, this converges almost perfectly, not almost, it does converge perfectly with our Fibonacci cluster. So we have 4 levels, 4 Fibonacci ratios at this level, which did, as you can see, with the help of the 1.272% Fib projection, did bounce price to the upside, and give a reasonably considerable move. I think with around more than 100 pips, and that's within a downtrend. So let me just remove these levels just to avoid confusion. Guys, are there any questions on this setup before I move on? If there are, do step forward and ask, because it's better to understand this as we go. If not, I'll move over to this Fibonacci cluster here. So as they say, trading with the trend is your friend and things like that. I looked at this downtrend and tried to anticipate possible resistances, possible Fibonacci ratios that could emerge as we pulled back from this Fibonacci cluster here. So with this, I found a 100% Fibonacci projection at 74.26, and that's drawn from point A to B to C. Remember, 3 points, guys. And then I looked again. Is there another Fibonacci ratio converging at this level? And there was 100% Fibonacci projection from this point A, B, and C. Again, guys, 3 points, and this come in at 72.25. So almost at the same point as this area here. And in addition to this, we also had the the 61.8% Fib retracement, and that was drawn from point A to B. Remember, from the lower high to the lower low. And as you can see, we have, let me just zoom in so we can see. I'll mark this up as well. So as you can see, between these three areas here, these three levels there, the 61.8% at 74.20 at that point there, the 100% Fib projection at 74.25, and another 100% Fibonacci projection at 74.26. This was a this is what I call a textbook Fibonacci cluster, where they're so tight that it's very hard to miss. So as you can see, price did react beautifully from this level and continued lower. Okay, with that, there was also some Fibonacci support I found down here. This is not something I would have looked at trading, because as you can see, let me just remove this box. We have 100% Fib projection, which was drawn from point A to point B to point C. Remember, guys, Fib projections require 3 points of contact. But below this we had a Fibonacci projection of 1.618% at 70.84, and as I noted, that this formed a Fib support. This is not a Fib cluster. This is just traditional Fib support within the downtrend. Nevertheless, it did reverse price, but that's all in hindsight. Now, we have something we could be looking at on the Aussie dollar right now, and I do like this area above here. As you can see, we have a potential, let me just mark that up, a potential 100% Fib projection at 75.43, and that's drawn from this point here. So point A, point B to point C. So the low, the high, and the higher low. And if Aussie dollar continues to rally, we could be looking at this area here, which joins nicely with I believe it's a 61.8% Fibonacci retracement at 75.46. So look, guys, all I'm doing is trying to find areas of confluence with Fibonacci ratios. And you can see that this is joined closely by the 88.6% Fib retracement, drawn from this point here to this point here. And we also have, but this is not something I would really be impressed with. To be honest, I would want it to be within this area here. We have the Fibonacci expansion at 1.272% Fib expansion at 75.81. So yes, this is a potential area I am watching for future activity. And if you look at market structure alongside this, you will note that above here, so you can imagine that there are stops above here. When I say stops, I'm talking about there will be stops from traders looking to sell this area because of the supply that formed here and reacted here. So there will be stops above here, I believe, and stops in the form of traders, as I said, looking to sell the area, and stops and buy stops in the form of breakout buyers. So with all this bullish momentum above here, this could be an ideal area for larger sellers to come in from. Is this webinar recorded? Can I see it on the YouTube channel? Yes, George, you can. You can either go to the YouTube channel or on our main webpage. On our main website under resources, I believe, and you'll find all the previous webinars available there. Is this, we have another question, is this a main indicator in your trading, or is it secondary, i.e. your go-to indicator is another combination? No, I use Fibonacci trading a lot. If anyone that follows my market analysis will know I use Fibonacci ratios as and when they form. But I also use market structure as well. I use supply and demand, decision points. I also use clear support and resistance, trend studies, so identifying the trends on different time frames. I also use the relative strength index. And yeah, so that's all I use really. But I like to see if there's a Fibonacci cluster in the right location, I would consider this. It doesn't have to be converging with any market structure. However, it does help, of course, if there's clear market structure converging with the fib levels. Let me just click over to the dollar Swiss. Now this is something to watch for. This is something that's kicking off as we speak. I'm sure most of you can, we have another question. Quite a few charting packages have retracement and extension as well as arches and spirals, but sometimes not expansion and projection. How can you get around that? Can you still use a retracement and extension and calculate? So I'm not sure about that, Daniel. I believe MT4 has this. The MT4 has the expansion tool. All the expansion tool is the same. An expansion tool can be used as for Fibonacci projections and expansions. It's just how you allocate that on your chart. So and for the extensions, I believe you can also add that to your Fibonacci retracement tool. Remember, the extension is simply an extension to the Fibonacci retracement. So all you need to do is add the almost like negative numbers below the 100% retracement. I believe MT4 or MT5 has that. I know for a fact TradingView does. I'm not sure about the, could you do a projection on Brent as it's at a 3-year high? Yeah, just give me a second, Daniel. I'll try my best to, I just want to highlight this setup here. I'll ignore the other things and we'll try to get onto a few charts for you guys. Look, so as I said, I don't know why it's on the 2 hour, it should be on the 1 hour. The 1 hour chart of the dollar Swiss. For anyone that watches, looks at harmonic studies, you will note this is an AB equals CD pattern in the making. And as you can see, this is marked up with the 100% Fibonacci projection at 91.69. But this is something to watch, the area below this. We have a number of Fibonacci levels, and this consists of a 1.618% Fibonacci projection at 91.43. And remember, guys, a Fibonacci expansion is drawn through 2 points. So we start from point A, we draw it to point B, and then we extend it back to point A again. Okay, so that's how you draw the Fibonacci expansion. So start at point A to point B, back to point A again, and that will give you your Fibonacci expansion. We also have within this area let me just get the markings up. This is a 61.8% Fibonacci retracement drawn from this point to this point. Very basic stuff, that is. And we also have a 78.6% retracement drawn for a Fibonacci retracement drawn from this point to this point. Remember, only 2 points are so as another Fibonacci retracement. And we also have the 200%. Let me just zoom in for that. The 200%, whoops, I'm trying to highlight that. Right, the 200% Fibonacci extension, and this comes from this point to this point, okay, and that comes in at 91.53. Okay, we have a comment here. There is too much noise on the chart to clearly understand Fibonacci. Are you talking about these charts, Mohan? I'm terribly sorry about that, but I just wanted to try and get as much as I could on the chart so it gives you an idea of, yeah, I'm sorry about that. What I can do is I'll delete, let me just see the Bitcoin actually. Let me just delete this quickly. I'll delete all of these on the drawings and we'll go fresh. So this is a fresh chart on the H1 time frame for dollar Swiss. So we see this structure here. We can draw a Fibonacci projection. Okay, Fibonacci projection from point A to point B to point C. And we'll place the 100% Fibonacci projection. So 3 points, 1, 2, 3. Fibonacci extension at 91.74-ish. Okay, so that's a potential area of support on this chart. Now, if we want to try and see if there is any convergence to form a Fibonacci cluster, we can have a look first at the Fibonacci retracements, and that comes in at, let's have a look at the 78.6. So there's not much going on really connecting with that area. So I'm going to keep the 61.8% on this, the 61.8% at 91.52-ish. And then I'll draw another Fibonacci. So with the Fibonacci retracements, again, as I said at the beginning, look for clear swings. Don't try to overcomplicate things. And then I'm going to come down to the, as you can see, the 78.6. Now we're starting to see something within this area here. Okay, so we have a 78.6 and the 61.8, and these are both Fibonacci retracements. Now with that, is there anything else we can add to this? So I would go now to the, I would see first if there's anything on the Fibonacci extension, which we previously drew, and add that. So for me, this is not really something I would be interested in, given the, this is just too far away for me. So let's keep that as it was and look for a potential Fibonacci expansion. Remember guys, a Fibonacci expansion drawn from the first point to the second point and then back again. That's a Fibonacci expansion. Now if we go down to the 1.272, we're coming up to that now, but I'm interested in this level down here. So now we have the, let's get to them two. We have something around this area forming. So we have 3 points reasonably tight. Okay. And then we also have something that we could look at. Would you look at multi-time frames using Fibonacci's? Yes, for sure. I would definitely look at, I do look at Fibonacci's on the multiple time frames. This is just one structure. So if this structure aligns with a higher time frame Fibonacci structure, then it's very, very high probability. So let me just extend this because I remember it. So we have the 200% Fibonacci projection within this area. So now we have a Fibonacci area of potential support. Now this has got no noise on the chart. I hope this is clearer for you guys, Mohan and Bertha. We have a clear Fibonacci support to look at on this chart. Now we did have some charts. There was gold, I think. Someone wanted to look at gold. Let's have a look at gold. Look, guys, instead of going over charts, would you like me just to quickly explain how to draw these on the charts again, so you leave with a clearer explanation, because you can analyze this yourself once you understand it fully. That's the goal, isn't it? For you to understand this fully and to look for Fibonacci, you need to be able to look for where these converge. I always look for convergence with these Fibonacci ratios. So look, essentially the Fibonacci retracement is 2 points, right? So we're in an uptrend. Excuse my drawings. So we're in an uptrend and we're looking for a Fibonacci retracement to form. Let's get rid of this. And we're looking for a, all right, the 50%, the 50% ratio. There's not a Fibonacci level, as I explained at the beginning, but this is, you know, this is regularly voiced as a potential support or resistance. So as you can see, we have a Fibonacci retracement. I assume most of us here understand Fibonacci retracements, and I won't go into any more detail on that. So Fibonacci extension. Now, let's remove this. Now imagine we are in, actually, let's keep this on. Imagine we are in an uptrend, little history going back, and price decides to form a lower low. With that in mind, we would have had a Fibonacci retracement drawn from here to here, right? We'd have been looking for resistance to form at these areas here coming across. That didn't occur. And we broke through the 100% Fibonacci retracement to 127. Let me just, and now we're in the areas, so we're looking at 127% in the minus, right? So below the 100% retracement. So the 1.272% and the 1.618%. This is all it is, an extension of the Fibonacci retracement. Don't get confused with extensions and projections, and they're the same thing. They're not the same thing. A Fibonacci extension is an extension of the Fibonacci retracement, nothing more. And as I said, you can use them in the AB equals CD configurations and also the 3-drive patterns. So remember, Fibonacci extension only requires 2 points, and that can be found once the 100% of the Fibonacci retracement value is breached. Now, if we remove this, okay. Yeah, there's so many sites out there. I've seen so many websites. They really confuse this. And this is why I see so much confusion among traders stating that this is an extension and expansion. It's not. You know, it grinds me sometimes. And, you know, so hopefully this will help you guys, and you'll be able to see things clearer. Right, so a Fibonacci projection is simply point 1, point 2, point 3. Now remember, a Fibonacci projection requires 3 points, 3 points. And with that, let me just ping on a couple of, perfect. So the Fibonacci projection, as you can see, point 1, imagine this was a high low, okay. And we're looking to project possible resistance in the future. So we have the, we start from point A, this is a higher low, higher high, higher low. So we need the higher low, higher high, and higher low. 3 points, A, B, and C. Simple as that. Then we extend that to the upside. Imagine this wasn't here. Sorry, imagine a small retracement, a move has formed. We know, okay, if price continues above this high here, above this previous high, there's a possibility price will reach and react from the 100% Fibonacci projection. Again, guys, 3 points, Fibonacci projection. Okay, and then we can extend things to the 1.272% and the 1.618%. Finally, we have what's known as the Fibonacci projection. Now, this is simply when you, let's get rid of this. This is simply when price is here. Imagine price is surging higher, and there, you know, like the S&P 500 in recent times, where it's just surging and surging and surging, and you just can't find any resistance because we're at all-time highs. So what do? You can adopt the Fibonacci projection tool. So imagine this is price, and imagine the history is just continually trading higher. All we do is simply find a point on the chart there, and then extend it back. Okay, so that's 100% of the move there. Then we can look at the 1.272% Fibonacci expansion, and then we also have the 1.618. Now, I know other traders do use the higher numbers, so there are other numbers involved in that. For me, though, I just stick to the basics, the 1.272% and the 1.618%. We have a question, do you wait for it to breach the higher high on the Fibo before going for the projection? If I remember correctly, I mean, you can do if you want to wait for, that's totally up to you and how your and how you have your system set up. But for me, if I see a mild retracement, a mild reaction forming here, I know there's a possibility we are going to test these highs. So it's, but to be honest, that's a really good question. I would say the safer bet, of course, is to break this previous high and then apply your Fibonacci projection, as I've done here. Then you have levels to watch out for, potential levels. Now, and if this level converges with support, resistance to the left, or even you know, a longer term for a longer time frame Fibonacci. Let me just try and line them up. So a longer term Fibonacci retracement to the left, then you have a potentially good area of resistance to be working with. Okay, so guys, I hope this has helped explain me the Fibonacci concepts a lot more than me just throwing things at you on the charts. Are there any questions before we look to wrap things up? Because I want you guys to leave with a clearer understanding of this and of all the four Fibonacci levels. If there's not, do step forward, ask me now, and I'll go over it again for you. 1 second, I'm not gonna. I don't really want to just go, what the chart of oil. You mean WTI? Oh, we got one asking for WTI and one asking for Brent. Let me just click over to. Let me see WTI. Okay. Okay, and on the what time frame are we looking at? Higher time frames, I guess. 4 hour maybe. So there's also some. There's straight away I see something kicking off here. So we have, look, that's actually reacting right now to the Fibonacci. We can actually go to the daily time frame for that. Let's go to the daily time frame. So we have, look, right now, Brent WTI crude oil is reacting from the 100% Fibonacci projection at the moment. Let me see if there's anything else going on. Now, do you remember what I said in the previous demonstration? So we have 100% Fibonacci projection here. Now let's look if there's anything connecting with the Fibonacci expansion. Remember, expansion, 0.1, 0.2, 0.3. And look, we have now we have some confluence kicking off here. Let me just get rid of this so it makes it easier for you to understand. Okay, so look, now we have the 100% Fibonacci projection drawn from three points, and then we have the 1.272% Fibonacci projection at 82.31. Now we have some confluence setting up. Now, to find further confluence, we could even look to the past. So I would go to the highest of highs, to the lowest of lows, to see if anything's lining up. Unfortunately, I don't think it is. Let's see if anything's kicking off down at these lows here, maybe a deep 88.6%. I don't think so. No, no, nothing's really lining up with that. I don't really see anything else, but yes, as far as I can see on WTI, is this what you was referring to, the kid, on WTI? You was referring to this area here. So yeah, so there is something kicking off here for sure. I've deleted the Fibonacci projection, which I shouldn't have done. So we do have something kicking off here. So yes, this is something I would be looking at. As you can see, price is reacting to this level has reacted to this level. Whether it holds whether it holds price is another thing, is difficult to judge. But as you can see, we have seen a mild reaction going in recent trade. We have a question. Can you help me? Can you help me out? Can you help me get the projection levels for? Kamal, I need a chart for that. There's no chart. You've asked me for projection levels for, but there's no chart. There's no symbol. So can you help me get the projection levels for Fibonacci retracement, Fibonacci extension, and Fibonacci projection? Sorry, Kamal, I'm not sure I follow what you mean there. So look, any questions on what I've shown so far? I've tried to go over it as best as I can. Hopefully, look, guys, as I said, watch the recording. The recording will will help you go through it at your leisure. And as I said, look, please do send me over questions. Don't be shy. Send me over some questions, and I'll happily respond with more detailed charts and things. And we can make sure you understand this fully, because I know Fibonacci is a very popular way of navigating the charts, and quite understandably, especially the Fibonacci clusters. If there's one thing I want you to take away from this, is to look for Fibonacci clusters. look for at least 3 points of confluence, 3 Fibonacci ratios to converge, and then work from that. We generally see a reaction from these Fibonacci clusters. Where is the best place to follow your daily analysis? No, look, my daily analysis is available in the Traders Hub at FP Markets, and that's printed daily, and is usually up live or 10 p.m. UK time. So just when the markets close in the US. Just look out for there, and we also post it on the FP Markets Twitter feed and the Telegram channel, as well as Facebook. Brilliant. Look, I hope this has been. Yes, please, Kamal. Please email this to me, and then I'll help you out through the email system. Hope this is opened your eyes to the correct way of applying Fibonacci levels. As I said, please do look at the recording if you want to look at it through at your leisure. So look, webinars to look forward to are our session on technical divergences on Tuesday the 19th of this month, and then a session on multi-time frame technical analysis near the end of the month on Thursday the 28th of October. Again, if there are any specific topics you would like me to cover or talk about, or as I said, questions related to this content, please feel free to email me at marketanalyst@fpmarkets.com. Yeah, have a great day, and I hope this has been beneficial. So I'll see you all very, very soon.